And there's another chart I think to show here too, which is all the pain, not just in crypto again, but around the world. Trump had talked a lot about you're going to get so tired of winning in his first term, right? You're going to get tired of winning. We're going to be winning everywhere. But if you look around, there is no market right now getting beat harder than America. Look anywhere else and you're doing better. And so it is painful, but it's not just pain being felt only by crypto. Long-term plan still intact. Eventually rates come down, eventually pain goes away, and eventually crypto rips. Welcome everybody into another episode of Coinage. I'm your host, Zack Guzman, coming to you live from our Brooklyn studios here in New York City as we are watching Bitcoin retrace yet again. It had touched this level a little bit ago, but now back below that $80,000 level as traders continue to grapple with what is going on in macro markets. You're seeing the yen continue to gain in strength, potential kind of flashbacks to what we saw play out last year in a lot of the jitters when that happened. So a lot to dig into with just how far we have to fall, potentially all the way down to 62K, depending on who you listen to. So still a lot more pain to be endured, which is pretty crazy when you consider outside of Bitcoin, there's still a lot of pain, even larger than that pullback right there in the alt. So we're going to dig into all that as well as get into fund flows and what we're seeing out of Michael Saylor as he prepares another $21 billion avenue to buy Bitcoin. So potentially some buy support coming from him. But before we get into all that, I want to thank our sponsor for today's episode. That, of course, being Stacks. Bitcoin's $1 trillion potential is untapped. Stacks unlocks it. Convert your BTC to SBTC and earn up to 5% APY in Bitcoin. No custodians, just trustless DeFi. Your Bitcoin working harder. Bet on Bitcoin's future now with Stacks. Our thanks to them, of course, as we get things kicked off. And as we dig through all this, let's not forget that on Friday, we did see, I think we have a little bit of some video from it back then. No, we don't. But if you watched it with us, we took that live. It was from the White House. Not a lot to come from it, depending on who you ask. Just kind of a nice opportunity for a lot of people who paid a lot of money to get some FaceTime with President Trump in the White House. We'll have a little bit more on that and the reactions to it. But want to get started with what we are seeing play out right now in Bitcoin land, because that's the one that I think is perhaps most important. And on that chart, as we just showed you, if you zoom out beyond a month, you think about where we were a year ago, not even, but really just before the election created this huge, massive surge, we were trading at around 68. So that's why it's kind of crazy to hear from Tom Lee. Just want to play a little clip of what we heard from him at Fundstrat. As you know, we cover their research. They've been pretty spot on. Their technical analysts saying that 62 is where this goes next. Just want to play a little bit of what Tom said on a podcast and jump into it on the other side. Here's why he says 62 is next.
Another group that I think makes sense is digital assets. I do think so. Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement.
And now on the other side, when you have CoinDesk asking around, you're not hearing things that are too dissimilar from that. This article up right now talking about a new target of 70K. Once again, as Japan bond yields surge to 17-year highs. And of course, anytime we see that play out, you're going to get some jitters. And really, it's not unique what's happening right now. I feel like I need to stress this every time. If there are people who are tuning in who only pay attention to crypto markets, you might not realize what's happening in the macro markets, despite the fact that, yes, Michael Saylor is there, who says that he wants to throw another $21 billion into this, which we're going to get into in a second. $21 billion sounds like a lot, but not a lot at all when you think about the scale of global finance and what really is at play here. And we think about yields in Japan growing, and all of these jitters that we saw play out before. And on top of that, recession fears that are now also getting larger and larger. So you got two targets. I'm giving you two to maybe pay attention to there, including what CoinDesk flagged as 70K, that coming from the chief operating officer at BTSE, considering a range of around 70 to 80K in the coming weeks. And we gave you the Tom Lee range of all the way down to 62, which is based off of the idea of weakness all the way through the end of March. And so I'm just flagging those 2 points as, look, if you were here for up only, you got sold. You clearly weren't listening to Coinage, first of all, because I think we've been pretty on par as well with, hey, look, these things are going to happen. The charts are going to look a little rough. And, it's not just Bitcoin. It's also weakness across other assets, including Ethereum, which really will, I think, unfortunately, you're sitting here. That's not even right. This one got to be refreshed. I was going to say 22. That would have been good, but this is unfortunately not the case. We're down about to break 2K. So, again, we flag these things because we try and warn you. It's a little bit easier to navigate when you have, hopefully, heads up on these things. In my camp, I would sit here and say, look, if you got caught flat-footed and you didn't see this sell-off coming, you're sitting there now. Well, what do you want to do? You want to hang on? You want to sell now and miss potentially a pop-off rally that could happen whenever markets turn, whenever this happens? And there's another chart I think to show here too, which is all the pain, not just in crypto again, but around the world. Unfortunately, Trump had talked a lot about you're going to get so tired of winning in his first term, right? You're going to get tired of winning. We're going to be winning everywhere. But if you look around, there is no market right now getting beat harder than America, whether that's through our stock market, whether it's through, the people he was just trying to impress at the White House summit and where crypto prices are right now. Look anywhere else and you're doing better, whether it's Germany or, really anywhere. And so it is painful, but it's not just pain being felt only by crypto. I just highlight this because, again, this is research from Fundstrat. I'm borrowing from them. But again, it is the case that right now, a lot of this is self-inflicted because what Trump wants to do with what he's trying to push. And, I'm sure you can make the case that there's a long-term plan in place here. What he's trying to do with tariffs. And if you listen to smart people like Jeff Park at Bitwise, they say, look, long-term plan still intact. Eventually rates come down. Eventually pain goes away. And eventually crypto rips. And I don't think anyone, including Sean Farrell from Fundstrat as well, has said that has broken down yet. And they have a long-term price target this year of $175,000 for Bitcoin. So just saying, there's that. To potentially look forward to. Where we go in the short term in terms of pain to the downside, I'll let you figure that one out on yourself as we talk about those two price targets. Now that we've put that aside, let's take a look at what we always do on Monday, which are two things. One, what the hell is Saylor doing? And two, how are fund flows looking? And if you look at the fund flows chart, I'll give you an update. It's not looking good. This is once again down and to the right is where we're at in terms of people trying to navigate what they want to do with their crypto. And again, a majority of these are now controlled by ETF flows, whether it is Bitcoin or whether it is through the Ethereum ETFs. And in the CoinShares report, the number for this week finally coming in at outflows of $876 million across all of these things. But potential signs of capitulation, as you see there, not as bad as it was. And so you could look at that chart and say, maybe the worst is over. Sure, you got 4 consecutive weeks of outflows, but less than what it was before. And so there's maybe potential for hope on that chart. But in general, I think, again, these are backward-looking indicators in terms of how much money is coming out of crypto investment products. And unsurprisingly, the majority coming out of Bitcoin ETFs. But also, as CoinShares flags in their report, a weathering of short Bitcoin activity, seeing outflows of about $20 million, suggesting investors are close to capitulation. Again, could be signs there. We flag them, we throw them out. And perhaps not surprising at all to see outflows when you think about price and volatility and everything that's happening with Trump right now. That just a lot of people, again, do not want to get caught in this headline game. Last thing I'll say about Trump, and I think that this is interesting, just again, as I've flagged before, is a lot of anger was directed towards Argentina's president Javier Milei after his meme coin went boom and bust in a span of just 4 hours, if not less than. And I really do think that this is interesting, as today we see Trump's token basically round trip all the way back to where it was on day one. If you had been like literally, I think, in the room in DC when he launched this thing, you might have gotten in around $7. And I say that because I had nothing else to do, because I have no life, and I was sitting there watching this all play out on the day that it did launch, and I got in around $7, and we're at 1080. And so for as much anger that was there for Milei boom and busting, again, I think it's hilarious to think about Trump's coin now here in March. Sure, you had a little bit more time to ride this wave. Maybe you got out. Maybe you sold on day 3. But kind of interesting to see this meme token now completely round trip and be here at 1080. Just kind of given what we saw play out. Apparently, time horizon does matter. You got to give people to exit the Ponzi, I guess, is etiquette 101. But interesting to see all of that play out, because not even Trump's meme coin is safe in this sell-off. And so we try to tie things full circle with the Bitcoin double dip and the meme coin pain and the global macro markets, all of those things playing out. Not even Trump's meme coin is safe today. And of course, I promised we would look at another thing we always do on Monday, which is, of course, Michael Saylor. And if you look at that one, it's been interesting because he was on the sidelines, didn't want to buy much Bitcoin when we saw the huge sell-offs happen. And partially, I think it was because he wasn't entirely sure how much dry powder he might have to continue buying these things. And when you think about what he needs to do to take advantage of the dip, he's going to need more money. And that is what he was out announcing today, which is pretty interesting considering the fact that they already had this plan to get 21 billion, the 21-21 plan, basically, which was through debt and equity, trying to raise 21 billion on each side of that. But now, on top of it, adding to the 21-21 plan with a new way to raise more money, which is through preferred stock options to buy more Bitcoin. This sale is in addition to the 21-21 plan, targeting a total capital raise of $42 billion, which is what it was before. And I think it's interesting because you put all this together, and obviously the opportunity to buy the dips is much larger when the dip is larger. And so how deep into this is Michael Saylor going to want to go? If you thought he was done, the answer is he's not done, and nowhere near to done, because he is now preparing a way to raise $21 billion via sales of its Series A perpetual strike preferred stock, STRK. And so maybe that's an added boost. But again, I would stress, even if this does happen, I mean, we've seen maybe $1 to $2 billion on the margin buys from Michael Saylor and Strategy. And we've seen them do things and we've seen them not do things. It really does depend, I think, the size of the sell-off right now. And all of that could be dwarfed just by a single week in terms of sales coming from the Bitcoin ETFs. And so how it all plays out, I don't know. I think the longer this goes on, some of the buys from Strategy do become less and less, I think, influential for the market. And perhaps more influential for the market might be what follows from what we're going to talk about in a second, which is out of the White House summit, President Trump talking about this all the time. President Trump releasing, by the way, a hype video around his White House meeting to really, I think, put some pressure on other sovereigns around the world, whether or not they want to actually dip a toe in buying crypto and Bitcoin. Because if you watched it, I'm trying to bring it up, but we'll get into this later on. Trump did tweet a full-on hype video around this White House crypto meeting. It's kind of like a little edit to show everyone who was there and what he was doing, which is pretty crazy if you really think about it. So I don't know what to make of that, but potentially you could see much larger outsized buys from sovereigns, other sovereign wealth funds, as we've seen already, and the states as well. Let's not overlook those as they make their own pushes to potentially buy Bitcoin and hold them in strategic reserves. Outside of that, on the politics front, I do think it's worth highlighting something that we were laughing about before the show, just because there is no plan on the horizon for a central bank digital currency here in the U.S., speaking of politics. And yet, that apparently has not been communicated, and or it's just too juicy to pass up when it comes to being on the other side and saying, you know what? Even though no one wants to do a U.S. CBDC, especially under President Trump, Republicans are still going to rally against the idea of one because why not? And that is exactly what we're seeing play out now in D.C. You had Majority Whip Tom Emmer, who was actually flanking President Trump at the White House summit. He was just a few seats down. Might have been the highest ranking politician outside of the White House that was on the table next to Donald Trump. And despite all of that, here's what we got from DL News. You got Tom Emmer coming out and saying that I'm going to reintroduce my bill to ban U.S. CBDCs, which, of course, he introduced under the last Congress, but this time around wants to do it again. And it made more sense, by the way, when he introduced this last time, because you did have a Democratic president and you did have all of kind of the financial tooling of the agencies in the U.S. actively talking about some of this. But even just as recently as like a couple weeks ago, you had Fed Chair Powell talking in House testimony about, actually, it might have been the Senate testimony. I need to clarify that. It might have been Senate testimony. In fact, I think it was, because he was asked by Bernie Moreno, one of those new Republicans in the Senate, whether or not he would pursue a CBDC. And even Jay Powell, who before was kind of like, yeah, maybe we'll do it. Even Jay Powell out there saying it's not going to happen under my watch. Take a listen to this exchange with Fed Chair Jay Powell in the Senate not too long ago.
Something that concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you for that. I think that's extremely important. It makes me very happy to hear you say that.
No doubt it makes a lot of people in crypto happy to hear him say that as well. But nonetheless, you do have Tom Emmer moving forward with reintroducing his bill to block a CBDC from ever happening. And look, I get it. I mean, because, you know, Trump could lose, or sorry, he's not going to run the third time, right, guys? Right, guys? That's not happening. Of course not. So whoever the Republicans run could lose in this next presidential election. So I get why you might want to pass something that says, look, even though no one wants to do this, let's codify it. No CBDC ever. Might be tricky to win enough Democratic support to get that over the line. However, now it's a lot easier because Republicans basically run both sides and also control Senate banking. And so last time, that's what did Tom Emmer's bill in. So who knows? This time it might actually get done. And if you look outside the U.S., it is fair to point out that even though it's not happening here in the U.S., it is still happening in the Eurozone, because you just had Christine Lagarde come out and say, look, we might be ready for our own central bank digital currency come October. And so every one of our European nation friends, get ready and pass this stuff, because we're going to be ready in October. And you had some nations come out and say, hey, look, we're a little worried about this because things aren't working as smoothly as they should be. And that is what Reuters reported, with EU lawmakers voicing their own doubts about the digital euro following an outage at the ECB. And so I don't know. I think it is interesting to kind of compare a little bit of, you know, the way that the U.S. is looking at this versus the way that the EU is looking at this, moving full steam ahead with a central bank digital currency. Well, even despite not having anyone be in favor of them here in the U.S., you still have Tom Emmer rolling out legislation to say, look, we're going to block these for good. So very clearly that these two economic zones, allies, although maybe less so now, the Eurozone and the U.S., both kind of looking at CBDCs still to this day very differently. And I think it will be interesting to watch how those two strategies play out, especially if October is the go date for the ECB, because who knows? Who knows how that'll all shake out? Which turns us back to the last thing on the docket, which was, of course, the White House summit, which brings us back, I think, full circle to talk a little bit more about what we saw play out at the White House summit. Again, if you look at the charts, obviously didn't do much in price, but I don't think that's necessarily the fair assessment of what played out in the White House summit, particularly because, that's not the full story. You can never look at the chart and say, okay, nothing came of the White House summit. Because I think if you actually watched, and of course we weren't in the room, however, I did talk to people who were in the room. And if you ask the people in the room, kind of normal as she goes was the general vibe and general takeaway that, that we've heard about what happened once the media was pushed out of this. It was that, so I think we can take a look at this. I think that would be good. The point there being that everyone in the room generally had somewhat of a similar takeaway, which is, look, zoom out a little bit and think about how far we've come when it comes to presidents and their views on crypto and what is to come when you have one. I mean, there are not a lot of industries that would ever have play out what we just saw play out, which was, I can't think of any since maybe 2008 when remember when all the automakers got thrown into a room and they're like, hey, shit's bad right now. We need to work together to figure this out. And I'm not saying that's kind of the pretext or the context for why this meeting was called. However, it is fair to think about that, hey, shit's bad right now. But the general takeaway, I think, is as you have these two bills ushered through Congress, it did show a unity in a way that President Trump is still backing the industry and still backing the idea of getting things done in Congress on the stablecoin front and on the market infrastructure front. Both of those things would be incredibly bullish. I am a little bit confused, though, and I was having this conversation with somebody this weekend. It is a little confusing when you think about who would have had the most benefit from clarity on what is and what is not a security. It would have been the tokens that were in the deepest fights. And so I think about Ripple, as we bring that chart up. I think about Ripple because for whatever reason, they're the one that has gained the most. And of course, I get it. The SEC case being dropped is a huge win for Ripple. But think about what it means for the rest of alts too, which is, okay, these things might not be securities. Clearly, Ripple's not the only one that benefits from that. And yet, if you look at almost any other alt, legitimately bring up any other alt. Texas, if you even had one, I could bring one up and we would see almost the same thing, which would be the exact opposite of what the Ripple chart looks like. Look at Avalanche. Absolutely decimated over the last year, down 57%, but the bulk of that basically playing out over the last month. And so I think it's weird to consider the projects that probably had the most to gain by virtue of the market infrastructure bill and the idea of the SEC backing down across the board that none of these things are securities anymore, are still the most beaten down. So it's kind of a weird thing to square. But nonetheless, I think that that's the silver lining to take away from the White House summit is, again, all of these institutional powers, all of these power brokers that exist in that room, I think all stand to lose together if a lot of these altcoins never come back and it stays just kind of a Bitcoin only game. And so I don't know. We'll see what all plays out. And of course, Coinage will be following all of this per usual for everyone at coinage.media. And by the way, I'd be remiss as well if I don't point out that we just published our new episode featuring El Salvador. as a closer look at those things, I think anytime you get a little disillusioned, this is just personal friend advice, by the way. Anytime you get a little disillusioned, you get beaten down, you get into a dark place because number go down consistently again and again and again. You're getting slapped on the face by red candles. Things look dark. You're depressed. You say, when are things going to turn around? You suddenly turn into a New Yorker and you say, Zach, when are things going to turn around? And I can't tell you when, but I can say if you zoom out and look at some of this stuff, which is what we did in El Salvador, you realize that there is a use case here, and it might not be so obvious sometimes in the US. And so I would recommend everyone go check out our El Salvador video because I think it was actually pretty interesting to see. Texas agrees, as someone who doesn't even believe in crypto. Being there on the ground and seeing how some of this stuff is being used by locals in a country like El Salvador, I think it's pretty cool. Having finally paid for 12 beers in a bucket for $12 using Bitcoin, I think it's pretty cool. And so those are the things I focus on in the darkest of moments. And those are the things that I would encourage everybody else to focus on in the darkest of moments as well. That'll do it for us today here on Coinage. I want to thank you for tuning in. As always, you can check out the biggest headlines in Web3 at coinage.media and own this outlet with us as the only community-owned outlet built on Ethereum. For now, dare I say, dare I leak some news? For the rest of the week, we'll continue following the biggest headlines per usual, as well as have a big announcement to share ourselves. I'm not going to tease anything harder than that. That'll do it for us this time. For everybody here at Coinage, this is Zack Guzman signing off.